Jayesh Mehta, the MD and India Country Treasurer Bank of America, now live with us to talk more about this. Good morning. 7887 on our screens with all the news flow that's coming in from the US Fed, the FOMC. It's looking like the US dollar index will continue to appreciate. So, 80, should we get ready for that?
Yeah, we should get ready for everything, right? The way the world is, it's like we earlier thought 79 should get settled, but way last 2 days movement has been, it's the market will try out all the levels, all the benchmark levels. So it's like 79 is first they will test. If they don't see heavy intervention, they will try to take it higher. So that's what the market will do. But yeah, you're right. It's like mainly more than the local weakness. Of course, you do have FPI outflows, but it's more about flight to safety, US strengthening, and how to compare dollar strengthening, dollar index. Just not with us, it's with the rest of the countries, right? So rest of the countries being weak, dollar index is thriving, and we're going to see that impact on rupee too. So that's, I would say, it's more of external dollar strengthening than intrinsic rupee weakening situation at this juncture.
Nothing much really supporting the rupee in the sense, whether you look at the FPI sell off, the way the foreign investors have been selling and the velocity of that. There are no IPO flows either, for example. What there is seems to be confirmation on in channel checks that we are seeing some intervention by the Reserve Bank. Can you confirm anything for us on that front? Are we seeing our central bank support the rupee?
So we have been, hearing about it, right? So we have been hearing about it at every level. They were there. In fact, yesterday people were expecting, because there was a future expiry, people were expecting that RBI will intervene, but I think it didn't that much as the market was expecting. And I think that's what I'm trying to say is, like, they will see at what level RBI intervenes heavily. On the macro, you are right. You're not seeing the FPI flows, you're not seeing the IPO flows, but I think we are doing overall fine. We, of course, the oil is the worry on the current account, but we have pretty good reserves. So it will, of course, depend on RBI. And as I said earlier, is like market will try out where is the hard stop RBI is going to put, if any. Of course, RBI has been behaving what they have been saying, which is they don't want to put number in mind. It's just when there are sharp moves, they just want to intervene during that point of time, and they have been doing that. But as I said, like earlier, yeah, we thought 79, but now, till the dollar strengthening continues, we don't really can figure it out a number.
Sure, Jayesh, but the other way to look at it is that Indian currency has been much stronger than other emerging markets, at least. We haven't depreciated as much as the likes of Argentino peso or the other currencies as well when it comes to EM. Is that something to take heart from? And separately, since we have you with us, wanted your take regarding where the 10-year is headed. We started the year with a level of around 6.7, if I remember it right. We have seen levels of 7.6 already. Where do you see that stabilizing going forward?
So firstly, on rupee, you're right. Why only emerging market do we have versus dollar with other currency on even the developed market? We have depreciated much lesser, which is good. Which also shows the strength of our reserves. As of right now, with this high reserve, it is not like something like 2013. So from that perspective, we definitely have done better than other countries. But as I said, like it's more about dollars strengthening rather than other countries. And of course, a lot of other countries, particularly the developing world, have been quite weak, and that is going to impact our rupee. So that's on the rupee side. On the bond side, very surprisingly, last few days, the bond has been very, very stable. It's roughly around like 745, 46 kind of level 10-year, which has been sustaining for some time. I think overall, if you look at purely on the yield terms versus our inflation, I think 746 is well priced. It's a good level to enter, but we, irrespective of the Ukraine war, we had another issue of supply, and that supply, we need that fourth buyer, and at some point of time, we will have RBI to support that. So, from that perspective, purely from a value perspective, 746 is good, but can it go higher? We think so. Maybe same thing like rupee. Where will RBI put their hands? And that's for next 2 months. We will see yield inching up slowly, unless you have 25% or $20 fall in oil and stuff like that. But even after that, that will be maybe 25, 30 basis point. But because of the demand supply dynamic, we will see slowly the yield inching higher. So we have to wait. But I think by August we should pick out on the yields wherever it is. So, but nothing much, maybe 1/4% higher or so.
Would be quite a bit for the bond market as well. 746 is where we are at, good entry levels. And Jayesh, just before I let you go, wanted to understand from you how how to explain the ferocity of the move that we have seen on currency over the last couple of days. And it's a big move coming in as far as the rupee is concerned, almost 1% over the last 2-3 sessions. What's the underlying trend here? Is there any can you spot something for us of what's happening as far as this pressure is concerned, and why this sudden ferocity of the move?
No, it's very clear. So it's like we have in past seen, when there are large moves, RBI intervention coming in. Of course, RBI, what we hear is central bank using multiple market. Of course, we don't have any confirmed data source as of this time, but they are using not only spot intervention, spot forward FX, NDF. So from that perspective, we don't know what exactly is they are using. So this is just all hearsay. So I'm just caveating myself that this is all hearsay. We don't know what things they are using, but definitely the impact of spot intervention typically has more weightage, which is what market was expecting, and it has not come in yet. So particularly in the last 2-3 days. So I think at 79, market will try and test out whether that intervention is there or not. If not, they will try to take it a little bit higher. So that's what the market will do. So it is, again, both bond and rupee, particularly rupee would be more dependent on what RBI stance is going to be in terms of intervention. And of course, as I said, like, they are very clear that they are not targeting a level, but they will definitely make that volatility is low.